Welcome back to episode 2 of Pay as You Earn Taxes. Daktari, most of us commute to work.
Yes.
From home to work
Yes.
on a daily basis.
Yes.
And of course we use fare.
Yes.
Am I supposed to deduct that fare before I pay my pay as you earn? Because it is an expense that I'm incurring.
Yes.
When going to work, yeah.
No, you are not supposed to deduct. The only things that are deductible,
Yes.
is the mortgage interest.
Mm-hmm.
In case you have visited a bank and you have a facility with the bank, and so the mortgage, and maybe you have borrowed about let's say even $1 million, and the bank is charging you 15% per year.
So mortgage is a loan given to you
by the bank,
and
you have used a house as the security for that.
Okay.
For that loan.
A house that you're living in.
Yes, okay. It's called a mortgage.
Okay.
If it is you have used a car as a security, now it is called
a
car loan.
A car loan. Okay.
But mortgage is usually, the definition for mortgage is when you use an immovable asset, including a piece of land, immovable.
Okay.
But now when you use something that is movable like a car, now it is a car loan.
Okay.
So if you have taken a loan,
yes,
to build your own house, then the interest that you are supposed to pay to the bank because of that loan,
yes,
you get a relief of 25,000 per month. If you are paying maybe interest of about 50,000 per month on that loan that you have borrowed,
yes.
Then the first 25,000 is waived by the government.
So you'll pay just 25,000.
You just pay only 25,000
because you've been given a
relief of 25,000.
Okay.
So they give a maximum of 25,000.
So what
per
if
month.
You're paying? You're supposed to pay 25,000 as interest.
Then you don't pay anything. The government pays for you.
Okay.
They give you a relief.
Okay.
So it is usually a maximum of 25,000 per month.
But now it depends with what you are earning.
It depends with. It doesn't depend with what you are earning.
It
depends with the amount of
loan
that you have borrowed.
Yeah.
And of course now the amount of loan informs
yes,
the amount of interest that you are supposed to pay on a monthly basis. Because now we are talking about mortgage interest relief.
Yes.
Mortgage interest relief. So if you had borrowed and you are supposed to pay an interest of about 30,000, the government will not waiver the entire 30,000, but 25,000.
So you pay 5,000.
You pay 5,000. So at the end of the year,
yes,
every employee is supposed to enjoy a maximum of mortgage interest relief of 300,000 per year.
Okay.
That's
so that one is it is until you clear the loan.
Until you clear the loan. Until you clear the mortgage. Mortgage interest relief.
Okay.
Then we come to insurance relief. And the way when the government is giving relief, it usually do give relief if it wants to support something, or if it feels that a certain commodity is supposed to be considered as a basic right for someone.
Okay.
Yeah. So the government now has been supporting insurance as a sector.
Okay.
Now, if you have an insurance policy that is based on life insurance policy, or health insurance policy, or education insurance policy, either for yourself or for your spouse or for your children.
Health and medical is the same.
Health and medical is the same.
Okay.
But the kind of cover that you have taken,
yes,
it should be for more than 10 years.
More than 10 years?
For it to qualify to be an insurance relief. Okay. Either life cover or a health cover or education. Yeah,
of course,
for instance,
life and education,
yes,
mostly they are more than 10 years.
Yes.
But for medical, I'm not sure.
Yes, you can take a cover for about for a longer period.
Okay.
So if it qualifies,
yes,
then 15% of the premium that you are paying to the insurance firm, 15%, you get an insurance relief.
A tax relief.
An insurance tax relief. Yes, of
15,000.
15,000.
Okay.
15,000.
Okay. That's fine.
Yes.
All right. Okay. That's good.
So actually, it's 15% of the insurance. It's not 15,000. It's 15% of the premium
that
you are paying, and it is capped
So the premium is the total amount that you are paying for that entire period of time.
Yes, assuming the insurance cover you have taken is for 120,000.
Yes.
Maybe it is for if it is
120,000 per year.
120,000 per year.
Yes.
So the 120,000 is the premium that you are paying to that insurance firm. So per month, it is 10,000. Okay.
Yes. Yes.
So what now the insurance relief the insurance relief that you will enjoy from that is 15% of 10,000.
Not because it is per month.
It's because it is per month. 15% of 10,000,
okay.
which is 1,500.
Yes. Every month.
Every month.
Okay.
Because at the end of the year, the maximum you can enjoy is 60,000.
Okay.
In terms of insurance relief, you can enjoy to a maximum of 60,000.
Okay.
And per month, you can enjoy a maximum of 5,000.
Okay.
60,000 divided by 12.
By 12. Okay.
So the only deductions that you make are for mortgage, interest relief. Then we have the insurance relief and the personal relief. And the personal relief. And it's good to mention here, just as I have said, the Finance Act of 2022 changed something. Initially, the NHIF contributions were not tax deductible. But now they are. Starting January 1st January 2022. And we are talking about we are just about to file the returns for the 2022. So when now you go to upload that form, Excel form, from the KRA portal, now you will be required to also deduct the income, the expense that you incurred when paying for NHIF for employees, which is a good thing. Which is a good thing.
To the employer.
It is a relief, not to the employer, to the employee. At the end of the day, it is your part.
Yes.
When you are calculating the pay as you earn, or even the amount that you are supposed to be paid, when the accountant is preparing the payroll, he says that you are supposed to be paid 30,000, for instance. We less your NSSF, then we less your NHIF, and now you are paid the net. Now, usually or previously, the amount for
net, they will pay as you earn.
Yes, then they
deduct pay as you earn.
They deduct pay as you earn.
Then they pay.
Yes. Yeah. But now, no, previously it was not like that. Let me show you how it was.
Okay.
You are paid 30,000.
Yes.
You deduct NSSF. You pay. You subject that net to pay as you earn.
Without deducting NHIF. It was only in NSSF.
It was only the NSSF.
So right now you're saying
so that time you would say 30,000 minus NSSF. You are left maybe with the 29,000.
Yes.
Then 29,000 is the one that was subjected to pay as you earn.
Yes.
You are left maybe with 25,000. From 25,000, now you deduct NHIF.
Okay.
So you see, you have not benefited.
Yeah.
But right now it will be the other way around.
So you're being paid 30,000.
Yes.
You deduct NSSF. Then you deduct
NHIF. Yes.
Then you subject the
to pay as well.
Okay. I get it.
Yes. And when we talk about NSSF, NSSF is also tax deductible. And NSSF is the amount that the employer is contributing to a provident fund or a pension fund that is supposed to benefit the employee when that person retires.
Yes.
So the employer is supposed to deduct the income. For instance, you are earning 100,000, and your employer every other month, 20,000 of what you are earning is he's depositing to a pension fund or a provident fund. That one will not be subject to pay as you earn. It is deductible. Just like NSSF. Okay. NSSF we used to pay 200 per individual, though now it has changed starting last month.
Okay.
So NSSF is deductible, and that is the minimal amount of money that is allowed by law to be paid to pension fund or to a provident fund. There's an employer or there's an employee who will be willing to be deducted a maximum of 20,000. Even 50,000, you might say, maybe I earn this amount of money, 50,000, I should not be paid. Let it be paid to the pension fund.
That is an SSF.
You can choose an SSF. There are many others. There are many others.
Okay.
So if you choose 50,000 to be going to a pension fund, because it is your money at the end of the day, you will access it after you retire. They will not deduct the entire 50,000. They will only deduct a maximum of 20,000 per month. You get the point? So 20,000 is not what will not be subjected to pay as you earn. But the extra 30,000 will be subjected to pay as you earn.
Oh, so I think people should take advantage of that. I mean, that money is going to be given to you after you retire.
You know the problem, and apart from now when the government changed the way it has been doing things, you can imagine someone was contributing 200 per month, and your employer is matching that figure, so it is 400 per month. In a year, 400 times 12 is 4,800. So in a year, it's 5,000. So if you have worked for 20 years, at the end of the day, you get 5,000 times 20, 100,000 after working for 20 good years.
Wow. Okay.
So if it is not that it is mandatory, someone might choose to even invest that money in a treasury bond.
Yes. At least there you are getting some interest.
Some interest. Assuming today you put 100,000 in a treasury bond, and it is earning 14% per annum. So by next year, your 100,000 will have grown, generated an income of 14,000. Then 14,000. Then 14. Pension, it is nil.
It is nil.
Yeah, it's very minimal. It is very minimal, if any.
Yes.
And it cannot even cater for the inflation. Because 100,000 right now might sound so much money, but 20 years from now, it will be like 1,000. It will have lost value. It will have lost value, and you would know by that because there are some properties that right now they are going for 100 million. 2023, but 20 years ago, 2000, you would have bought that property at 100,000.
To 100 million.
Yeah, to 100 million.
Wow.
So you can imagine if now NSSF is encouraging us to save, and then 20 years from now they give you 100,000, they will be giving you like 1,000. Yeah. So it's good. People take advantage.
No. We are going to invest somewhere else.
Yes. It's good to be
wise. To open. Wise. Yeah. Okay. Now I think yes. My final question is how to calculate the pay as you earn.
Yes.
And you've not told us about the penalties that one incurs. They do not pay as you earn, the employer.
Yes.
And the employee. Yes.
It's a very good question. How to calculate it's what we have discussed about the graduating tax scale. Then in terms of penalties, it is the employer who is obligated to file for pay as you earn for his employees. Remember, a company does not pay as you earn. It doesn't pay as you earn for itself.
It pays for its employees. What does the company pay?
The company is supposed to pay corporation tax at a rate of that percent.
Okay.
But now it pays pay as you earn on behalf of its employees.
Yeah.
So if a company does not pay, first of all, there are three penalties.
Yes.
One is if you don't file. Then number two, if you don't pay, you can file, but you have not paid. And if you have not paid, you can pay after 1 month, and you might choose not to pay even after 1 year. So there's another penalty for that.
Okay.
So the first one, if the company does not file pay as you earn returns by 9th of the following month, then you will be penalized an amount equivalent to 25% of the amount that you should have filed.
25%?
25%.
That's the penalty?
Yes. Yes.
at the end of the day, you'll pay that penalty of 25% of the total you are supposed to pay.
Yes.
Plus that total amount that you're supposed
to pay. Exactly.
That, okay.
But now the penalty is it is 25% of the amount that you are supposed to pay, or 10,000, the higher of the two. So assuming it is a big company,
yes,
and it has many employees, so at the end of the month, it was supposed to pay as you earn to the government, amounting to 100,000, for instance, 100,000. Yeah. So now the accountant forgot to file. For some reason, yes, the accountant did not file. So penalty number one for not filing on time, it's either 25% of the amount that you are supposed to pay, or 10,000, the higher of the two.
So of course they will go for the 25%.
They will go for 25%, which is now the 25,000.
Yes.
So accountant has filed. That penalty has been registered by the system.
Yes.
Now, then we come now to late filing.
So if they are supposed to pay 100,000, they will pay 125,000.
Yes, though there are still other penalties.
Okay.
Because that was for
for not filing.
Yes, for not filing
or late filing.
Or for instance, someone can file on time.
Yes.
You are supposed to. The deadline for filing is 9th. So I file by 5th. Am I subjected to any filing late payment penalty?
Not yet.
Any late filing penalty? No.
Not yet.
Because I filed on 5th, and the deadline is 9th. That's okay.
Yes.
I've filed, but I have not paid.
Okay.
So
you've not paid after 9th.
After 9th,
yes,
I still have not paid.
Yes.
So now there is a penalty for not paying by 9th.
Okay.
And that is 5% of the amount that I should have paid.
So 5% of the 100,000.
100,000. So I get taxed 5,000. Penalized 5,000.
So in case you do not file by 9th,
yes,
and you do not pay by 9th,
yes,
you are filed twice.
You are filed.
You are
penalized twice.
You are penalized twice.
You are penalized twice.
For not filing.
For not filing.
And for not paying.
And for not paying.
Okay.
Okay. So we continue.
Yes.
So let's say maybe the second person looks better. That you file by 5th, but you did not pay. Even by 9th, the deadline, we are now past the deadline. So you get charged 5%
of the amount, the total amount you are supposed to pay.
Yes. Now, this amount that you are supposed to pay, because now I'm using this because you have already declared in the system, and KRA even by this time it is aware, because by 5th of the month you filed, by 9th you did not pay. You are charged 5%. So if this 5%, if this amount that you declared to KRA that you are supposed to pay, we gave a hypothetical example of 100,000. If this 100,000 continue to be understanding, continues to be outstanding. Every other month that you have not paid it, it will be generating an interest of 1%. So after 1 month, you are penalized further.
Yes, an interest of
1%, which is 1,000. The second month, 1,000, until that time that you will pay.
Okay.
So that time that you will pay the interest of 1% that will have accumulated.
Yes.
Then we'll pay the 5% for late payment. That's a one-off. And then we'll pay the 25% for late filing.
And then you pay the total amount.
Yes.
You are supposed to pay.
And that is for the company.
Okay.
That is for the company.
Okay.
Because the company is supposed to do on a monthly basis.
Yeah.
That is very clear.
It is.
Now, an individual is not supposed to do a summary of all the earnings that this person generated that you generated within that year of income. And that's what you are saying for 2022. It is supposed to be remitted and declared by 30th June this year.
Yes.
So the individual who fails to file for pay as you earn return, you are penalized 2,000 shillings per year. And
that one for individual, it is still known as pay as you earn.
It is pay as you earn because now you are doing what you are doing is you are providing a summary of everything of the employment income that you
generated
received
within that
year, that financial year.
Yes.
So you you declare. And of course, you usually don't pay anything because the pay as you earn is a final tax. Everything that your employer taxed you before giving you your money was the final tax. So by 30th June of this year now, you just say, I was employed by ABCD company. This is the amount that I was earning. This is the amount that I'm supposed to pay as a pay as you earn, but I will not pay anything because it has already been deducted at source. Been paid. Companies don't file for pay as you earn on 30th June. Companies, after they file the pay as you earn on a monthly basis, their story ends there. The company obligation is on a monthly basis. After they have done the pay as you earn on a monthly basis, there's no any other point the company will file for pay as you earn. But you will be required to file on 30th June of the following year to give our summary. But at the same time, when now you are doing yours for the 30th June, the company will be doing it will be filing its tax, which is equivalent to pay as you earn for a corporate, which is now referred as corporation tax. Yes.
For the whole year.
For the whole year. But now, as an individual pays the taxes on a monthly basis, the company pays its taxes, corporation tax.
Once per year.
Not once per year. 4 times in a year. You remember we had discussed the first 25% by 20th April, the second 20th June, the third 20th September, and the last 20th December. So the corporation tax for the company, it is not paid on a monthly basis, but it is paid on a quarterly basis. Then the company again provides a summary by 30th June of the following year. When also an individual is also providing a summary of the same.
Even companies provide the summaries of the same.
Yes.
Thank you. Yeah, I think that is quite clear, and it is quite important for individuals and the companies to file for that. It is called
pay as you earn.
The summary of the whole year.
Yes.
And for companies to file for its employees on a monthly basis. All right. Yeah, thank you very much, Dr. Kamau.
You're welcome.
Yeah, for our viewers, I hope that is quite clear and you've learned how to pay taxes. Kindly take action. Do not let KRA get to you. Do not forget to subscribe to our YouTube channel, share, and let us know what you feel. Also, ask more questions and we'll be glad to answer you. See you next time.